Good evening. This is the Eye of the Storm podcast for the S&P 500 and the NASDAQ 100 for Sunday, November the 13th, 2022. I do want to present the alternate count that I have right now, or view number two, however we want to term it, because I think that it's appropriate that I've had conversations with some other analysts and also have received some work done by some of the subscribers to the channel. And so I feel it appropriate right now in view of what has transpired over the last week, basically, over the last several days, that has kind of convinced many people that we're likely to continue to go higher. So here is the count as I'm still working it right now. But I want to go over to the SPX, which of course is just the cash market for the ES. Sometimes it has a lot of gaps because of the different days. And we're here on the daily chart. And I have discussed this previously. And so it may not come as a total surprise to viewers or subscribers that have been watching my work or listening to me for a little bit of time. So again, we have the super cycle wave 3, cycle wave 5, primary 5, intermediate wave 5. Those are at the all-time highs in the SPX, and that's going to come in at 48.18. And so what we're going to look at right now is the counts are the same, so I can change this one. I worked it back down a whole degree. And as I have laid out previously, that we needed to keep in mind that the primary wave A, which on the S&P chart for the ES sits here, and this is primary B, and we're working on the primary C wave, of which this would be intermediate wave 1, and we're looking to the completion of intermediate wave 2 and a pretty strong drop thereafter. Now, what the alternate count can tell us is that I dropped everything down a degree. So what these were minor, I dropped them down to minute, dropping the a little bit larger, which in the previous chart or on the AES chart are labeled as intermediate degree, dropped them down to minor. What was labeled as primary degree, dropped it down to intermediate. Again, follow how we have to work this down. So here we have intermediate wave A of primary wave A. And then we have intermediate wave B of primary wave B, wave A. And then we have the C wave, an intermediate C wave, and you can see that 1, 2, 3, 4, 5, nice and clean, beautiful first, nice extended third, and then a pretty normal fifth. And then we got that blast off of that low. Now, what did that finish? It finished intermediate wave C, but then primary wave A. Instead of this being intermediate wave 1 of primary wave C, we're going to back it up. And by saying that this is primary wave A, it puts us into a position where, okay, we are now going to be tracking or tracing or be in process of putting in a primary degree B wave. Now, back before we even got this or this, I was feeling that if this was going to be A, primary wave A, we needed to do a primary wave B, and I felt that primary wave B should come in a little bit larger than what it did. But there were a couple of incidents of what happened is this back in August, which kind of capped that, and then the fact that the market did go down, broke to a new low. So it put several things back as if, yep, that could have been the primary wave B. But now I'm looking at it totally differently. And that we have the ABC on an intermediate degree to form primary wave A. And now we're doing the primary B wave. So the first thing that I would add to this, and again, this is on a daily chart, but the first thing I would add to this is what are the parameters? What are the limitations or expectations for a primary B wave? So we put in retracements. We're going to go from there to there. So A B wave can take several forms. So right now, the way that I have been counting this move thus far is A, B, and this is a C. For wave A, and then we have a wave B. Again, that it would be a intermediate wave 2. But if it's going to be an intermediate A wave of a primary B wave, it still could come out as an ABC and then basically put a B wave in. And then the C wave could be dynamic. And we'll go over that in just a moment. So if indeed we are now fulfilling or putting in intermediate wave A of primary wave B, we can figure out some Fibonacci's here as this progresses. But overall, what we would be looking for in a primary wave B is for it to come up to 41.55 to 43.11-ish, with potential to come up to 44.27. And that would just be basically almost the A wave. We almost, on this basis, we did actually get above. Via the future, we definitely got above. But via the cash market, we went up, and we actually, we did get above 4,000 on Friday. And that would have been on the cash market, 4,001. So we reached the 3A2, but in all honesty, I don't think even on a daily chart or even on an hourly chart that I can count this as complete. So what it may be, if this is going to be A, this is going to be B, we're in a C wave, which is always going to be 5 waves. So it could be 1, 2, 3. Now that would be either view number 1, view number 2, alternate, preferred. Either way, I don't think the upside is done just yet. So we'll go over that again in just a moment as we work through this alternate. Now, if indeed we can get this ABC in, and then we're going to label that as intermediate wave A. So these are minor degree, a minor degree A, minor degree B, a minor degree C wave. So these are minute, and that fits both preferred and alternate counts right now. So the way that this is being labeled. But I think we need to allow for this move to continue. And what I can do is, if we're going to use this, and again, this is going to come in 2 different ways, because on view number 1 or view number 2, I'm counting them both the same. That's an ABC up. What it actually forms yet to be determined. So I'm laying out the possibility of what we got going on here in terms of an alternate view, which would suggest higher levels, higher above current expectations over a longer period of time. And this may just chop around, work its way higher into December. Now, we've got a couple of things coming this week that are going to really put the ribbon around the package and maybe put it under the tree for that end of year rally that a lot of people are looking for. But let's just move on a little bit within this particular count. So one thing that I can do, I'm going to bring it down again. If we're just looking at it to be an intermediate A wave, then we get a B wave, and then we're going to get a C wave. So again, now what expectations, and then I'll break it down. What expectations can we have in terms of where can this complete? So if we get an ABCA and then ABCB, then we're looking for more of a flat here, but it would be that C wave that's like going to catch a lot of people off guard, because the C wave would then carry the potential to actually just do a great big run and go all the way past 44.27 and actually challenge, possibly in terms of it being an irregular B wave, where it goes up and makes a new high. That does exist, and I have to include it right here. But again, please understand, this is the alternate. This market still has to there's a lot of proving before you could start barreling in and getting long for a run up to new highs or even a run up to 4,400. So a lot has to come in. So let's take it one day at a time and see what the market is basically going to tell us. So we have resistance at these following levels. If indeed the alternate view is going to follow through and beat the count. Right now, we have resistance at 4,061. This is via the SPX again. So I will shift over and it'll be slightly different on the ES, but we're going to be taking a look. So, but on the cash market, which is where I'm working, this alternate view. So the counts are going to be the same. The levels are going to be a little different, cash versus future. But we have here resistance 41.55, 43.11, 44.27. Now, if it's going to actually be an irregular, then these come into view. Now, God only knows under the current environment, with the current situation, that the Fed would have to pivot and pivot big in December to force this higher. So, and they're basing it on the blast off that we had from the CPI. And I have my own opinion about that CPI, but I think it had nothing to do with the CPI in all honesty, because to be honest, if you look at the numbers, it was 0.1% better than expectations, 0.1%. So in this market produced 108-point move or even larger on Thursday morning, pre-market in 1 minute. In 1 minute, the NASDAQ moved 508 points low to high. In 1 minute. In 1 minute in the Dow, it moved over 900 points. That on a 0.1% better CPI, I don't know. So I think there were other forces at work during that point, and I think it had a lot to do with expiration. And they just needed something to latch on so they could, whomever came in, short covered, boom, force it, and drive the prices like we saw on Thursday. And lots of things happened. And I think it really rallied around Friday's expiration and the size of the positions that were out there and who held them. So again, we still have to fit that into what's going on, but I'm not going to really say that I feel that this rally is based on the market's interpretation that the Fed has to pivot. Don't raise it 3/4 or 75 basis points. They're going to come in at 50. Maybe they don't leave it alone. They leave it unchanged. Blah, blah, blah. So whatever the narrative that's going to get spun does tend to kind of push it in a particular direction. So it still could go up. And then we would be looking at a different count, this one, a primary B wave. So, but right now, both, my preferred still stands. But under this, yes, it has the possibility to climb and to continue to go. I will review it in the NASDAQ, but let me finish up with the S&P. This, again, I want to repeat, is the alternate view. And I am not in any way, shape, or form saying this is what is going to happen. Now, what I can add right here, since this is a podcast, an Eye of the Storm podcast, I can go in a little bit deeper and I can start talking about trading and getting caught in things. It's disruptive to us, but it's quite unavoidable. You truly can not get caught in these vicious turns. And by having your trading rules in place. And this is something that I talk about. This is something that I use in my coaching, and this is all the way down the line. To understand why you need to have this all in place before you put your trade on and why you need to leave it in place while you're working your trade, particularly if you're choosing to be a swing trader or carry a position overnight, because moves like this can happen. And I don't think that they're going to become one-off deals. I think that we'll start to tack on as this whole thing unfolds several more times. Because now we're kind of getting people geared up to, well, you know, that was the CPI. We got PPI on Tuesday, and gee, something might happen. And that could be the case. We will see. So back to having trading rules. There's 3 basic ones that I think everyone should have and really go with. And if you do it enough and you're consistent with it, you realize what your trigger is, you realize what you're looking for in terms of a target, because your trigger is either going to be a moving average, a Fibonacci, a particular candlestick pattern, and you have to know what the result of that pattern should do. What's the resolve of the pattern? And then you're going to be able to have your target. More important, you must have a level where your trade becomes invalidated, where it's not going to do what you just put this trade on for it to do. And it's at that level that you put your stop. Now, I'm very strong on don't move your stop. Don't take your stop off, because then what you're really working in your mind is, well, you know, I see what it's running. I see it's running. It's going to come back. It's going to pull back. I'll do it I'll catch it on the pullback, and then it doesn't. There will be days when it doesn't, or if it does, it's minuscule. Last Thursday was one of those days, and it just kept going and just kept going. And it just kept going. And if you don't deal with it, the market doesn't care. It just does what the market's going to do. So we need to be more diligent in terms of, like, you got to have that stop. You have to be able to put it in. You have to be able to figure out how you're going to put it in and leave it in. So you put it in GTC. So it's always there. Or you're putting it in through your broker. You're putting it in through your execution platform. So whoever has your money and whoever's like doling it out and controlling your trades, you put it into the market so that it sits there. And if it goes zipping up through it, in this case, you'd always want to put it in as a market order. You may not like your fill, but that's okay, because you live to trade another day. There's no reason to blow out your account by getting caught in these silly moves. We all work too hard to make the money that we make. It is not an easy market. And we're getting great moves, so we need to start protect. So that's what I really wanted to say about, trading. We really have to focus and realize that we need to keep in mind having our trading rules. Your trading rules are going to be different. My trading rules are going to be different from the next person down the line. My risk profile is going to be different than your risk profile, different than the person next down the line. It doesn't make any difference. Have your rules that fit how you're trading, why you're trading, how much you're trading, your position sizing, etc. Everything. Have it all in place before you get into that trade, so that when the trade happens, it's not going to be such a disaster for you. Okay, so what I want to do right now, having said all that, we have the parameters. I showed you how I got those fibs. They're just retracements. If this is going to be wave A, high to low, you're retracing up. And so, yes, the S&P does have this potential, if indeed this is what's going on. The market still needs to put in the confirmation of this being the case. I do not feel that it has done that yet. Now, what would do it for me? Basically, I'm going to go, I'll tell you, let's go over to the ES itself. Let's review that. This is my count. And what I've got now is 1, 2, and this, actually, I didn't put it in, but I'm going to go down to, let's go down to the hourly chart, leaving everything in that we have in, that we're A and a B, and we're working in a C, and that's for an intermediate wave 2. Again, just quick on this daily chart, sorry. Intermediate wave 1, intermediate wave 2, we're leaving that's primary A, primary B, we're in as primary C. Excuse me, we're looking for another turn lower. Now, For all we know, this market's going to head higher because if I go here back down to that hourly, I'll show you what it can do. If I got one, I probably will put the 2 here, but actually if I don't, I put 1, 2, and I got 1, 2, 3, 4, 5. This is 3. So I can put the 3 up here for the yield ES. And it's a minute 3 of minor C. So I'm still looking now for a minute 4th wave to complete and then do a minute wave 5 up. So, but let's pull this back out a little bit. I can't. I'll go to the 4-hour chart so I can put this up, because what I want to look at now is what we do have is we've got 1, 2, and 3. So let's take a peek at, well, I can't quite, but I can put on A, B, and we're going to look at the extensions for a C wave. And once I get the wave 4 in, what I was going to start to say, once I get the wave 4 in, then I can run extensions again, but for wave 5. We don't know. We don't know where wave 4 is going to come in at. Those look like it's underway right now with the S&P opening down 15, 16 points and the NASDAQ about 63. So back here, let's take a peek. I'm going to go there, to there, to there. Now we've got our C wave. So on Friday, we did get above the sweet spot, the 70.5%, and that was at 4,004. Next up is 4,039. Wave C would be equal to wave A at 4,130. Now, for me, in terms of this intermediate third wave, intermediate wave 2, I'm thinking that 4,130 should contain it. Now, that gives us that additional upside, and it may take us all the way through tomorrow. And then on Tuesday morning, we have PPI final. Now, I don't know. We don't know what it's going to be, but I think they're going to buy it up in advance on this whole narrative that's going like Fed's going to pivot, so that number is going to come out. If the CPI was good, now let's bear in mind, 0.1% better than expectations. Force that market to jump the way it did on Thursday. So if you're thinking that, well, if the market really loves the PPI, it's going to jump another here, 100, 200 points. Well, okay, from wherever it is, yeah, maybe it could. I'm not going to bet my bottom dollar on it. I'm not going to bet that the PPI is going to come out any worse or any better. So we'll wait and we'll see. I mean, we can go and we can look, and I will do that tomorrow at what the consensus is so that you can see. Now, what if it is indeed the intermediate wave 2? I truly do expect it to get above at least to 4,039, if not up closer to 4,130. It can go above it, folks, because what it can't do is it can't go above 43.26. That's how we have to keep it alive. The preferred count stays the preferred count until it's invalidated. It would become invalidated as it is labeled if it were to break 43.26. That's the, actually 43.27.5. That's the current high for the top of primary wave B. Or it's the start of intermediate wave 1. Wave 2 cannot exceed the starting point of wave 1. Otherwise, it's not a wave 2. Bear in mind, wave 2 corrects wave 1. Well, if it exceeds it, it's not correcting it anymore. So we then have to go with our alternate count, which suggests that this is where primary wave A finished, and this is working at the beginning stages of a primary B wave. So that's how I'm now working the whole thing. That's where this move cannot get past. It certainly can go here. It can go here. So we still can allow under an intermediate wave 2, a run up to 42.92. It cannot get above 4327.5. But if it wants to run to 4,300, it doesn't break. As long as it doesn't break, well, second waves have been known to do that. And under the current narrative that's out there swirling around, yeah, they'll continue to buy it. They'll continue to take Apple. Apple was up above 150. Apple will start going because expectations are now that it'll go to 170 to 180. And they'll think that by the end of the year. And maybe it will. Why do we care? In all honesty, if you really want to trade the index and you want to be more successful, you don't care why it's going in a particular direction, or gee, I was bullish all the way along because of blah, 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 blah. Fine. Technically, it don't care. The technicals do not care. We go over what could possibly create the situation because we're amongst millions that are trading. So, you know, a lot of different opinions. So anyway, what we need to just keep our eyes on. Right now, I'm thinking we got 1, 2, 3. We'll get a fourth wave down. It's still holding lower, but of course, we're only 20 minutes into the session. So, and then see if we get that turn, come up in a fifth wave, see if it doesn't finish, and see what happens after. We might have to live with this all through tomorrow. And I actually would anticipate that we're not going to start flipping out and crashing tomorrow, unless there's something else out there, which we know exists, that could trigger it. So that could happen tomorrow. It could happen overnight. Too much going on. So to stay focused on one thing that's the only thing that the market can react to, please don't. There are too many other factors out there which are going to control what this market does. And as we were so surprised last Thursday, whatever would kick it lower is also going to be a surprise. Something that just was not expected. We got a lot of it. Okay, so that finishes up the S&P. So tomorrow, small decline, rally I'm feeling. I think we will end up above Friday's highs and head up to at least 4,039 and maybe as high as 4,130. Over in the NASDAQ, but right now, excuse me, let me just finish up here. Right now, on the basis of our moving averages and our indicators, yeah, we're kind of coming off nicely. So that'll come down. So the hourly got pretty extended up into Friday's close. So, yeah, a little pullback and then another run up is what I'm going to think. And right now, we've already got a low of 79, 39.79. So if we were to look for a little bit of a fourth wave, we're going to go over here. I forgot to do this. My apologies. We're going to run them from here to here. And these are, oops, what happened? A little voice came in. Not sure why that happened. Let me take these down. We don't need to have that. We need to have bottom of wave 2 up to the top of wave 3. So what we have going on, 382 would bring it down to 39.10. But 0.236, because I think the market's got a little bit pins and needles, not going to let it come off too much because they're going to blow it through the roof, through the skylight up there. Once we get the PPI final. Oh yeah, that's what they're going to do. So you're going to find that people are not, they're going to be a little bit too anxious to step back in, because now the move above 4,000 pretty much is a given. That's the thought. Now, so to come down to 39.48, as long as it holds, similar to what it did prior, right? That wasn't a real deep, but that was the inside. That was 4 of the third. Now we're doing a 4. So coming down closer to the 50 would be in line. That's only 39.25. It's like, oh, a drop of 60. not bad, but the S&P's got so much volatility in it. It's like dropping 60 and going up 100, just common occurrence now, right? So 382 would be the most common, and that's 39.10. Okay, let's go over and take a look at the NASDAQ. But in the NASDAQ, I went to the NDX. So again, I'm using the cash markets to display the alternate counts, which in both, they're exactly the same. I've dropped everything down a degree. So minor A, B, C for intermediate A, intermediate B, where I have labeled primary B prior, 5 waves down to put in intermediate wave C, primary wave A. This is the beginning stages of an intermediate A wave of primary wave B. Let's go back. We have our retracement, and we're going to go to the all-time high down to that low. What are the potential? What is the potential for a primary B wave? We have 50 to 618, 50%, 13,600, 618, 14,350, 70.5, which is sweet spot, 14,900. 14,900. Where cannot this, with this B wave, and if again, now we're talking about the alternate count again, right? Does it have the potential where it could become an irregular B? Sure does. What we thought here still can happen here. Is it common? Not necessarily. Could they build a narrative that just pushes it? Yeah, they likely could. But they're going to have to get the help of a lot of pivoting, of a lot of evidence that, you know, it can't be conjecture. It can't be just some pundit going like, oh, inflation's dead. It's all gone. We're done. We rally. Without evidence, folks, it's just someone saying it. If you can talk evidence of why the Fed would stop raising rates, why we're going to call off the recession, by the way, the global recession. The United States cannot all by itself not fall into recession while Europe and Asia and everybody else falls into recession. I but personally don't think that we would do that. So here's Fred Waller. He's out there talking already. Hey, there's your first hint. The Fed's Waller says market has overreacted to consumers' inflation data. We've got a long, long way to go. Bingo. That's what I'm talking about. 0.1% better than expected produced a gigantic rally. I'm still going to present this, folks, because the market might just run and say, you know what, Waller, just because you're a Fed governor, who cares what you say? This is where the market, and we're telling you. Stranger things, folks. Let's finish this up. We could. Again, if it were to turn into an irregular, this is the level. Is that what I'm expecting? No, I am not. But I will trade what the market tells me it is doing. I am not going to be saying, oh yeah, it's going to run to here and I'm going to short it all the way up. No. Or I'm going to short it even all the way up to here. No. Or I'm going to hang on to a short, even up to here. No, I will not. I will be trading in the direction that the market is moving. I'm a day trader. And that is, I have been a position trader in the past. I carried very huge positions in options and futures and everything on the planet when I was living and trading in Europe. And did it also here, but more so in Europe. But again, I don't do it anymore because I don't particularly like the overnight risk, the overnight volatility that just kind of pops up, the gamma squeezes. You know, so you had to be with the advent of everything going computerized. It truly does change how things trade in terms of, you know, you have algorithms that can do a complete trade. It's all hedged, it's everything. And they're not going to be as subject to gamma squeezes because of the way that they hedge and have a complete trade, and it's often exercised that night. So again, I think we have to adjust to how things trade now, and to realize what really gets caught in the gamma squeeze. Some larger firm may have put a position on. That's what I think happened on expiration, and it may have been in the SPX. That's the largest traded, heavily traded options. That is what volatility is based on. So I don't know. And to be honest with you, it's like, well, it's only as a possibility, but who cares? We're going to trade the price action. We need to trade what's in front of us. We need to trade exactly. I do not trade on a daily chart. I don't trade on an hourly chart. Okay, so NDX, cash market, it's going to be a little different with the future. But 12,000, if this is a C wave, yes, I'm looking for it to kind of get up into here. But here are all our numbers based on the cash market. We would make the adjustments if the market tells us this is what is being traced out right now. This is what the pattern is now going to develop into. Unfortunately, if this is intermediate wave 1, then this market needs to break above 13,007. I got to figure that one out. Where was it? 13,720, 721. That's in the cash market. I believe it was 13,741 in the futures market. That's what it's got to break above. That invalidates the intermediate wave 2 count. That would really turn this thing more into what this is. And if that's the case, we're going here, 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 possibly to here. I don't know what the narrative is going to be. I couldn't tell you why the market would want to go up and do that. But if it's going to do it, I'm not holding on to a bad position. That much I'll tell you. Let's get over to the future so we can talk about tomorrow. Future, still same deal of what I've been talking about. Well, they're already gonna. No, they're not. Off of that daily. So in other words, here, the A, the B still in the place on the primary degree. We're in the primary C wave down, of which we've done the intermediate wave 1. We are now still within an intermediate wave 2. Let's look at what could happen. Same deal. 1, 2, 3. We're in a 4. We've already been down, already down to 11,766. Nice. Again, what I can do, let's do retracements. And let's do it from there up to the top of wave 3. And 382 is 11,465. Or, excuse me, no, 68. 11,468 is 382, most common. But minimal should get us down to 16,023, 24. 16,000, 11,624. Wow. Get your numbers, Michael. 11,624. Coming down there, that would be great. But guess what we have in the way? We have the 8, which kind of is holding it up right now. We have the 20 at 11,712. If it comes down in ABC and he hits that 712 and decides it's going to rally again, hey, it works for me. But I'm looking for it to come down into the price territory of the previous 4th, and here it is. Right there. Here also puts us into it. So I think we get a little bit more. And then we'll be able to line it up and put in for where we think wave 5 will come in, because we're going to do extensions. But let me go back out and let's take a peek. Not going to do it there. Got to go to that 4-hour chart so I can get it all in. We're going to look at what we got left on the upside, right? Because we're doing a C wave. So we're going to connect, and I got to, turn it over and put it on extensions. I'm going to go there, there, there. So what we're looking at a fifth wave up. We have already gotten past 11,885, and Friday's high was 11,876. So basically almost at 100. So we can go down and come back and just basically get an inch and above, maybe to 12,000, but 1.236 is 12,180. 1.382, 12,362. Both, the way the NASDAQ's been trading, if they really get ground up and they're going to push, well, then I think it can go. I think once we get above here, I'm still only looking for 5, and I'd be looking for a turn. Once I get that fifth wave, I'm looking for another turn. Where that fifth wave can go, I need the fourth first. So once we get that little pullback in the minute 4, then we're going to be able to add the extensions for that wave 5 and see where they match up. Right now, can't do it. Okay, so that's really the NASDAQ and the S&P put together. What we got going on in terms of numbers, we don't really have anything. We got a lot coming out next week. I will tell you that. And let's just go over real quick. Nothing tomorrow, really nothing tomorrow. We have the PPI final on Tuesday, pre-market. And then on Wednesday, we have retail sales and industrial production. Retail sales pre-market, industrial production is at 9:15, also pre-market actually. And then on Thursday, we have housing starts, jobless claims, Philly Fed. Philly Fed's the one that used to, in the good old days, used to drive this thing all over the place. It may still do it. And those are all pre-market at 8:30 Eastern. And then on Friday, we have existing home sales. So those are next week's numbers, economic figures and data that'll be coming out. So again, it could be a pretty good week. And we can't base it on one figure that's going to come out on Thursday like we did last week and then have that expiration. And don't forget that this next Friday coming up, that's the monthly expiration. So it could be a little bit bigger as a lot of things start to get prepared for the year-end stuff. Now, I am going to leave it there because I'm noticing the clock. I think we've been on this for a while. I want to thank you for taking the time to listen. I hope that it makes sense. Any questions, please put them in that comment. Leave me a comment. I do answer the questions. If they're legit and make sense, I will answer them. And thank you. And have a great evening. And the next update will be on Monday, the 14th.